Hey everybody, how are you? Hope you're doing well. Do me a favor before we get started. I need you to hit that like button. If you're not a subscriber, hit the subscribe button and notification bell next to it so that you will not miss the episode. So today we're going to talk about the 3 ETFs to make you rich. So first of all, it's important to plan. Plan. And by planning, I mean actually looking at the investment calculators and figuring out how much money you need to actually be investing to get to your goal. So you have to have an end goal and then play around with those investment calculators to figure out how much you actually need to put in to get to your goal. So some kind of plan and then making it an automated plan. All right. Also being consistent, having consistency over a long period of time is important. And say, for example, you may be in an unstable situation. There's a lot going on, right? People getting laid off, people getting fired. So you may have one account where you're taking the money out because you need it. Well, in that case, have a separate account somewhere else that you never touch, no matter what. All right. So consistency over a long period of time. Also, diversification is important, that all of your money is not just in one thing, as I'm quite sure that you are aware of. So, we're going to talk about ETFs. So, what are ETFs? ETFs are exchange traded funds. So, it's essentially a bucket of individual stocks. The difference between ETFs and index funds is that ETFs are traded daily, therefore, the price fluctuates, right? ETFs, they have a lower expense ratio and they have lower fees. And so you can get the ETFs from a brokerage account of your choice. Fidelity is an example, Vanguard is an example, Charles Schwab is an example. And so when it comes to ETFs, there are three different categories. So you want to get an ETF in each different category. So one category is the total stock market, a different category is growth, and then a different category is high dividend yield. All right, so starting out with the total stock market. All right, the total stock market. So you have these three different categories. You have the total stock market, that's the one category. You have the growth category, and then you have the high dividend yield. So this is producing dividends for you, high dividend yield. All right. So out of the one category, the total stock market, you're going to have VTI or VOO. Right. So VTI, this has around 3,540 stocks in it. It is composed of 31% tech. So it has a lot of tech companies in it. It gives the annual yield of around 15%. VOO, this has around 519 companies in it. So choosing one or the other from this category, the total stock market. Also has a low expense ratio of about 0.03%, meaning there are lower fees associated with it. All right, head on over to this growth category. So you got 1, 2, 3 categories. Heading over to the growth category, going to have BGT or BUG, right? So BGT it has about 328 different stocks in it. This produces a higher annual yield of around 20%. Then you have the BUG. This has about 164 stocks in it. Head over to the last category, which is the high dividend yield. You have VYM. That has about 570 stocks in it. This is the Vanguard high dividend yield. Or you have the VIG, which is the Vanguard dividend appreciation ETF. This has about 343 different stocks in it. So picking an ETF in each different category so that you are well diversified is a way to become rich. This is simple investing. You are diversifying. All right. Like I said before, this has a higher yield in comparison to the others. Now, of course, you want to do your own research and you're going to come up with your own conclusions on which ETFs that you would like to choose from. In addition to that, so you're playing around on the investment calculators, and when you get time, you're going to decide what your goal is, how much money you want to end up with. So say, for example, when you retire, you would like to have $100,000 coming in. All right. So in that case, you would need about 2.5 million, right? So whatever it is that you want whatever you want your profit to be, multiply that by 25. So that would be the goal. All right, say for example, this number is outrageous to you because no one ever taught you to invest. All right. Say, for example, you're behind, right? Maybe you've heard of investing, you've been doing investing, but you have been doing it at your own pace. All right. So if that is the case, what you want to do is use your other levers. And what are your other levers? Your other levers are real estate. Your other levers are single stocks. Single stocks are riskier. However, they grow way faster than groups of stocks. Your other levers are a business. So you have to figure out how to bring in income from a business. And this is if you are behind. And there's a whole lot of people behind. Why? Because this is not taught in the school system. And I would say that would be the main reason, right? So use your other levers. So real estate is the cheat code to building wealth right here. All right. All right. So it's very important to get on those investment calculators if you are not already on there and come up with a plan. So realistically, for people who have not been exposed to investing early on, it's going to take a multiple of levers, and that would be adding business, and real estate. All right. But if you're not already on the investment calculators, it'd be a good idea. Get on the investment calculators, find one, and start plugging and checking. Figure out what is your goal? What's your end goal? Is it 2.5 million? Is it 1 million? What's the goal? All right. And then how do you get there? Plug it in. So knowing that VGT, for example, going to give you a rough estimate will be 20% annual return. So start plugging and chugging. If I get 20% return, if I put this much money in for this many amount of years, how much money is going to give me in the end? All right. And if that is nowhere near your goal, then these are your other levers here. Real estate is going to compensate for that 30-year gap. Single stocks is going to compensate for that 30-year gap. Business is going to compensate for the 30-year gap. All right. So use your levers. Also, some people are not looking at all. They are avoiding. They're in the state of avoidance. So you have to look at it. That's the first step. You have to look at it. What is your situation? All right. What's your situation? Do you have more expenses than your income? If that's the case, if you have more expenses than income, then you got to fix that first before you even start budgeting. So budgeting will not even be the first step. The first step would be getting more income, right? After you get more income, then the next step after that is budgeting. All right. All right. So this is the three ETFs. Remember, you have 3 different categories. It's important to look. That's the first step. You got to look at it. You got to get out of that avoidance. You have to get out of the avoidance. That's the first step. Look and see what's going on. Look at all the income. Look at all the expenses. And if it's not matching up, you got to figure out how to bring in more income. All right. So thank you for watching, everyone. Do me a favor. Hit that like button if you like this channel. If you're not a subscriber, hit the subscribe button and notification bell next to it so that you will not miss an episode. Just remember, you're going to be okay, all right? You're going to be okay, but you got to do something. You got to do something about your situation, all right? It's been going on a little bit too long, and you got to look at it, make a plan, write the plan out so that it's clear, crystal clear what you're doing, and you got to move more aggressively, all right? All right, so thank you for watching, everyone. Do me a favor, if you like the channel, hit that like button. Also, I have a free newsletter. If you're interested in improving your finances, check out the link below and join the link to the free newsletter. Also, tune in. I will be interviewing people. I interview real estate investors. I interview entrepreneurs. I interview people that have different businesses. So tune in for that, and you will see them on the show one day. All right. Thank you for watching, everyone. Don't forget, on your way out, hit that like button, and I will see you on the next video.